Okay, welcome back everyone to our options education webinar series. Happy holidays to everyone. This is going to be a webinar today where we're just going to look at the platform itself. We're not going to talk too much about individual trading strategies and best practices. Today is just talking a little bit about what you actually get from the platform, how to utilize it, whether you're brand new to options trading and just learning and trying to figure out where to start, to those of you that are experienced options traders. Today, what I want to do is really give you an understanding as to why we started this company, what problems we wanted to solve, and show you how to actually utilize the platform the way we do every single day. Walk you through everything from how to utilize this platform to gain a view on what's going on with the market, to utilizing different strategies, whether you're looking to speculate on direction because you have a bullish or bearish view on the markets, or if you're just trying to generate some income by selling covered calls or cash secured puts, how you can utilize our platform to do all of those things. That's really what I'm here to cover here today. I'm going to try to go through a few different examples and really provide as much perspective as possible as to why we created this platform. So just a few different things. So this webinar is recorded, and there are some important slides that we'll send out with the recording after we're done here. So for those of you that are brand new to OptionsPlay, welcome. The tool that I'll be showing you today, you can access a free trial at OptionsPlay.com. For those of you that are on a free trial, a membership is $50 a month or $500 a year. But as part of the slides that I'll be sending out after the webinar, there's some really important links. As we go through the webinar, I will reference some previously recorded webinars on some certain strategies. So if you want to view those previously recorded webinars, in the slides, there will be a link for weekly options education webinars. I highly recommend that you go ahead and visit that link to see those previously recorded webinars. So if you want to learn about specific trading strategies or specific ways of trading or utilizing options for your portfolio, we have about 20 different pre-recorded webinars on different topics that you can follow along and learn about these strategies, but more importantly, see how you can implement them using OptionsPlay. You have links to our daily trade ideas, as well as for those of you that are brand new and learning how to trade, I highly recommend you to take a look at a resource called the Options Industry Council. This is a free resource available to everyone that covers a wide swath of options, basic education, as well as advanced strategies so that you can better understand these basically options education. The thing that the Options Industry Council lacks sometimes, in my opinion, is practical examples, because they use stock XYZ a lot, theoretical stocks. They don't have any real examples because they're an educational source, which is why we think that it's a really good complement to what we offer here at OptionsPlay, because everything that we show you, that we teach you with, is always with real symbols, with real things that are going on with the market, so that after you finish a webinar, you can log on and actually start implementing these things in your own trading account immediately. So today we'll basically go over is just a brief understanding of the platform. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. My background was in FX trading, and I started this company because about 7 years ago, we were looking at options trading platforms, and I myself used to have 4 monitors on my desktop to trade options. I had screens for option chains, I had screens for charts, I had analytics tabs, I had news, I had all these other things that I had to pay attention to. And then what we realized is that as options traders, we were taking the same steps over and over again. We were really just repeating some of the same tasks over and over again. So if we wanted to sell a covered call, we would constantly have to pull up the option chain, go through the same motion every single time. And then once we got to where we wanted to start off, we still had to do a lot of calculations in our head to figure out, what type of reward or what type of risk do I have with one of these strategies. And we wanted to just make that process a lot easier for ourselves. And that's really how OptionsPlay was started, was to make our lives as traders a lot easier. So today what I'll do is I want to show you OptionsPlay, the way we designed it, walk you through how we utilize this platform to give you some ideas as to how you can leverage the power of OptionsPlay for any type of trading that you're doing. So for those of you that are brand new, welcome. This platform itself is divided into 3 sections. You have trade ideas and watch lists here on the left-hand side. In the middle panel, you have your security analysis panel, and on the right-hand side, you have trading and income. Now, we built this platform because we wanted some place to have everything on one screen. And we want you guys to be able to research an idea, get a quick sense for what's going on with any stock or ETF, and quickly leverage that into an actual trading strategy within a few seconds. Not have to take 10 minutes just to search for an option strategy, because we know that you're short on time, you don't have a lot of time, and we want to make sure that you're able to vet through ideas and with a proper measuring stick every single time, and have proper guidance so that when you're looking at something, you have some guidance as to what the risk to reward is, or what the bullish or bearish outlook on a stock is. Have all these guides so that they provide checkpoints, if you will, so that you don't make some of the common mistakes that a lot of investors make. And that's really why we created OptionsPlay. So regardless of whether you're brand new and you're trying to figure out where do I start, or if you're an experienced trader and you're just looking for a tool to make your life a little easier, that's what I'm going to try to show you here today. Now, if everyone could just type into the chat window real quick. If you're brand new to options trading, please type yes. If you're an experienced trader, please type no, just so I get a sense for the audience here in the room. Okay, so I would say a pretty healthy mix here between experienced traders and brand new. So okay, great, that's exactly what I was looking for. So today, what I want to do is I want to show you guys. Some of you said you just started 4 weeks ago. Great, welcome. I really hope that this webinar inspires you to take a look at options. And the reason we did this is because a lot of users, when you first start out trading options, you're looking at a screen that looks like this. You have a bunch of calls, puts, and a bunch of different strike price and a lot of different expiration dates. Now, in my opinion, having a page that looks like this is kind of like looking through the phone book. Granted, it has everything you could possibly do in here. However, it's usually a little too much for a lot of basic things. So if you're bullish on a stock, or if you're bearish on a stock, perhaps you're looking to generate some income by selling covered calls. Where do you start? What expiration date, what strike price, what strategy? That is usually the challenge for beginners. Once you get past that stage and once you figure out where you roughly want to start, the next challenge is how do you actually analyze it? So if I know that I want to sell January 175 calls on Apple and it's going to be giving me a dollar in premium, how much yield is that? Or if the stock goes up 10%, how much do I make? If the stock goes down 10%, how much do I make? These are the challenges that more experienced traders have, and those are the things that you don't get from the option chain, meaning you typically still need some other tool in order to do that. So today what I want to do is I want to walk you through the entire workflow of an options trader, everything from idea generation to actual trade execution, and show you how OptionsPlay makes that process as simple as possible, and at the same time try to provide you with guidance as you go along. So I'm going to first start off with a user who has an idea or wants to explore an idea and has either a bullish or bearish or perhaps even neutral view on a specific stock or ETF. And I want to walk you through that process. And then next, what I'll do after that is I'll walk you guys through the process for someone who's looking to generate income, because we do tend to see that option traders tend to be segmented a bit into two different groups. You have your speculators on one side, users who want to buy or sell calls and puts because they're speculating on direction. And then you have other users who are just looking to generate income, sell covered calls, sell cash secured puts, generate income, may not necessarily have a directional view on the market, but just try to use options to generate income. So those are the two primary use cases that I'll walk you guys here through today, show you how OptionsPlay is designed to make that process as easy as possible. So let's start off with the speculator, someone who's trying to take a bullish or bearish view on an underlying stock. How can you go about doing that? So first of all, our platform is designed to, on the left-hand side, provide you with some ideas as far as where to start or what symbols to start with. So you have trade ideas, which are fresh ideas scanned for you based on technical scans. You have bullish and bearish scans every single day. And that allows you to quickly filter and sort each bullish and bearish scan to give you an idea as far as where to look. So here I have three bearish ideas for large cap and mid cap. I have 8 bullish ideas for large cap and mid cap. So I can usually, this is where I would typically start, is I like to start on the larger cap names, bullish and bearish. Take a look at some different ideas, and you can click on any of these symbols or click on the watch list, which breaks down the sectors for you. A very important thing for me in the morning to look at, where are the current sectors, where are they moving, which sectors are strong, which sectors are weak. Our watch list is really built in a way to allow you to quickly sort and visually see where all the sectors are. So as you can see, all the sectors are red here. This is showing you, and I don't think this is a surprise to anyone, that all the sectors currently are in bearish trends. And what we do is we sort it by the score. So you can quickly see what are the strongest stocks in the market, what are the weakest stocks in the market from a relative strength perspective. So it's not hard to imagine that energy and financials are two weakest sectors in the market versus real estate and utilities are the strongest sectors in the market, even though everything is trending bearish. This allows me to know which sectors are most bearish and which sectors are less bearish. This is usually a good starting point for me to frame where is the market and where are the different sectors. And if you want to dive into the individual sectors, you can. So if I want to look at financials, I can quickly pull up all the financial stocks, take a look at where they're currently trading, what the current trends are. So as you can see, the scores of 2 or 3 are the weak relative strength stocks that have bearish trends. And even if you scroll all the way to the top, they're all trending lower. So everything that I'm looking at is certainly pointing lower here on this specific sector, if you will. So this allows me to start taking a look at some ideas, start taking a look at where I want to look. So if I'm looking for bearish financial stocks, typically I would look for stocks that have relatively lower relative strength and trending lower. So Charles Schwab here is an example of a stock. As you see, it has a score of 3. So this is telling me that it has weak relative strength, and the 1 month and 6 month trend is bearish. And it's been bearish for quite some time. As you can see, pretty much since October, this trend turned bearish and continues to move lower. And this is really where the security analysis panel is designed to give you a guideline as to where the current trend is of the stock, as well as the relative strength. So you can quickly look at any stock or ETF and gain a view as to where that stock is currently trading. Comparatively, let's say I pulled up a stock like this. As you can see, technical score of 8, 1 month and 6 month trend is neutral. So this is certainly a much stronger stock than the Charles Schwab stock that I was looking at. This allows me to have a quantifiable way to type in any stock and get a quick reading as to both relative strength and trend. So maybe let's take a look at another sector that's a bit strong, like utilities, which is certainly a stronger sector. As you can see, Centerpoint Energy is slightly different stock, score of 10, so very strong stock in terms of relative strength. 1 month and 6 month trend is bullish. So this would kind of be the opposite of taking a look at a symbol like Charles Schwab. But this tool allows you to effectively type in any symbol and very quickly gain a sense for where the current relative strength and trend of that stock is, along with important information such as when is the next earnings date, when is the next dividend date, and what's currently going on with the price action, so that you don't have to have a professional charting software. You don't need to have separate charts just to gain a view for how a stock is trending higher and lower and what is the relative strength of the stock. And that helps you move into the next section. So as you can see, we're moving from left to right. The left side gives me ideas to look at or places to look at. Middle screen tells me why I should consider taking a look at that. And once I have that view on the underlying stock or ETF, there's 2 buttons here at the bottom. One says I'm bullish on the stock, or one says I'm bearish on the stock. This allows you as the user to basically dictate what type of strategies we display to you. So instead of using an option chain and try to remember, hey, if I'm bullish, what strategy should I do? If I'm bearish, what strategy should I do? We actually not only provide you with which strategies make sense, we also help you select the expiration date and strike price as a starting point. So if Apple's at 156 and you're bearish on the stock, you can select I'm bearish, and we'll present to you 3 bearish strategies. You can short the stock, you can buy the put, or you can buy the put spread. These are the 3 most popular trading strategies you can trade for a bearish view on Apple. You can short the stock, which is a strategy that actually I generally don't recommend because you have unlimited risk. You can buy a put option as a simple strategy to trade if you are bearish on the trade, or you can trade a put spread as a more advanced strategy. And notice that not only do we present these strategies, but we actually have picked expiration dates and strike prices for you. What we've done is we've picked reasonable starting points for anyone who's bearish on a stock to take a look at. This is not to say that that's the best strategy. There's no such thing as a best strategy, and I want to stress that. What we're really looking at is a reasonable starting point for someone who's bearish or bullish on a stock as to what is a reasonable expiration, what is a reasonable strike price for you to start. And usually what we're looking for is about 45 days out as a starting point in terms of expiration dates, because that is realistically where most of the actual volume is traded, is between 1 to 2 months out. And then as far as strike prices go, we always start near the money, because the near the money options is usually a good starting point if you're bullish or bearish on an individual stock. So this provides you with not only the strategies, the starting points, but now what we do is we really get into the analytics piece. We want to show you what your potential risk and rewards are before you get into a trade, because we asked a lot of beginners why they didn't get into options, or why did they traded options and stop trading options. And the answer predominantly was that they didn't understand the risk. They felt that it was too risky, and they didn't really truly understand that risk. So we want to make sure that you truly understand the potential rewards and risk of each strategy before you go ahead and place a trade. Regardless of whether you're bullish or bearish, we automatically present you with 3 starting points. So on the bullish side, you can buy the stock, which is probably the strategy that most of you are comfortable or familiar with. You can buy a call option, or you can buy a call spread. So these are 3 strategies, again, that provide you with, regardless of what your views are, a balanced view for any direction that you have for any given stock or ETF. And now what I want to walk you through is how to actually analyze these strategies. So if you're a beginner, traditionally you don't really quite know where to start. We provide you with those starting points. Now, how do you actually analyze this? So for those of you that are experienced, you might know that you can use the Greeks to roughly calculate what is your potential reward, what is your potential risk. And sometimes those are easy if you're working with nice round numbers, or if you're doing single leg options. But if you're trading multi-leg options, that becomes a little bit more difficult. And that's why we created what's called a Pml Simulator. This means that you don't have to do any math. I think the thing that I hated most about trading options sometimes was all the math, the mental math that I used to have to do in the back of my head to get a rough estimate that if the stock went up 5 points, how much money do I make, or how much money do I lose? So what the P&L simulator was designed to do was to give me exactly how much money I make or lose, and for regardless of what my outlook is. So Apple's trading at 156 right now. Let's say I want to be a contrarian. I think that this stock's going to rally because it's just had such a huge sell-off over the last few months. I think it's undervalued. I think it's going to appreciate over the next month or so. So I'm going to be a bit counter trend here. I'm going to take a contrarian view. I'm going to say I'm bullish on Apple. So what can I do? I can buy 100 shares of the stock, which will cost me 15 grand. I can buy a call option, which will cost me $1,100, or I can buy this call spread that cost me $965. So let's take a look at these 3 alternatives. Which one should I do? Should I buy the stock, a simple call option, or a call spread? Well, that depends on where I think the stock's going to go. The stock's at 156 right now. This thing was just at 184 a couple of weeks ago. So if I was bullish on the stock, I would hope that it would recover at least to around that 184, 185 level. So I can plug that in to say, what happens if this stock goes to 185 by February 1st, which is the expiration date that it automatically chose for me. So as you can see here, I get a clear sense for how much money I make or lose for each one of these strategies. So if I bought the stock, I make a really nice 17% return in about 45 days. That's a phenomenal return in 45 days. But if you look at the call option, if I bought the call option instead, I make 169% return. So almost a tenfold in return for buying the call option versus buying the stock. Now, partially of that is because it only cost me $1,100 instead of $15,000. That's why I'm getting a tenfold return. But if I bought the strategy on the right, the call spread, I only get 159% return. I know that sounds crazy that I'm saying only 159% return, but in this particular case, if I do get a rally up to 185, I know definitively that I'm probably better off trading this strategy here in the middle because I'm going to get a higher return. But we can't just think about returns here, because when you're trading options, you're mostly concerned about risk. So what happens if Apple continues to fall? And I think there's certainly, by all means, a very real possibility that Apple continues to fall. There's this real possibility that the stock market may continue to fall. What happens if it goes down to 150 or maybe even 140? How much money do I lose? If I bought the stock, I lose $1,700. So I'm losing quite a bit. 11% of my $15,000 I'm going to lose. If I bought the call option, and this is really where options is key. If you're brand new to options trading, one of the great things about trading options is that you have asymmetrical risk, which means that if the stock goes higher, you get to have dollar for dollar gains. But if the stock goes against you, you have limited risk. So the amount of money you pay for this call option is the most that you can risk. So if the stock goes down to 140, you're still only going to risk $1,100. Doesn't matter if the stock goes to zero, you're still only going to lose $1,100. Versus if you bought the stock and if it goes to zero, you lose $15,000. So that's a big difference between trading stocks and trading options. So if the stock goes down to 140, I lose $1,100 here and I lose $965 here. So this allows me to not only frame what is my potential reward, but also my risk to the downside. And it's really important for beginners who are starting out to really look at both sides, because now you can have somewhat of a mental note to yourself as to what may happen if the stock goes higher as I expect it to, or what happens if it doesn't go the way I expect it to? How much money am I actually risking? Because once you have that mental picture, you are better prepared for trading, because what you want to know is what your best case and worst case scenario is before you get into a trade, not after. Because what you do, what I tend to see from beginners is they'll buy that call option without really understanding what their risk is or when they'll lose that $1,000, if it goes against them. This tool allows you to put in any given scenario as to where you think the stock will go, as well as allow you to adjust for when you think it will hit that price. So maybe you think it'll hit 185 by mid-January. So that was my target price, was 185 by mid-January. As you can see here, I get 171% return, even higher return if the stock makes that move over a short period of time. So this is really where you can utilize this tool to quickly structure three strategies very quickly. Type in any stock, immediately get a sense for what the three strategies are. So for Charles Schwab, if let's say I'm bearish on the stock and I think it's going to continue going lower, it just broke below 42 support, I think it's going to continue moving lower. There's not a lot of guidance here as to how much lower it can go. Looks like the low here was around 38. So perhaps I think it'll go to 38, but I think it'll probably crack below that or even a little lower. So there may not be as much downside to this stock as some of the other stocks. So let's say if I think it'll go to 35. If I shorted the stock, 11% return. If I bought the put option, 112% return. If I bought the spread, 170% return. So this is really where I can very clearly see what my potential rewards are if I'm right, but also on the same token, what my risks are if I'm wrong. So what if Schwab goes right back up to 46, 47, which is where it was just a few weeks ago. It was just at 46 2 weeks ago. So what happens if it goes up to 46? Whoops, wrong number, 46. If I had shorted the stock, I lose $650. If I bought the put option, I only lose a third of that, $235. So not only can I get a better return if I'm right, I'm risking way less if I'm wrong. But if I look at the strategy on the right, I only risk 185, so a fraction of what I would be risking if I had shorted the stock. And that's really why I always recommend, if you're bearish on a stock, take a look at put options or put spreads, because it really protects you in that instance where you're wrong. And shorting a stock is very, very precarious, because just pure probabilities, stocks have a higher probability of moving higher versus lower. So you always want to protect yourself by having that implied put that you have when you're buying an option. Because when you buy an option, whatever you pay, that's the most amount of money you can lose no matter what happens. And that's really key. So Now that we've talked a little bit about how to utilize this platform to quickly find a strategy, how to use the P&L simulator to simulate what will actually happen on if the stock goes in your favor or against you. For those of you that are a bit more advanced, you might want to change the expiration date. You might want to change the strike price. You can click on modify for any strategy. And what we've done is we've made a user experience that's as easy as possible for you to navigate the full option chain without ever having to pull it up and scan through pages and pages like this. So if you want to change the expiration date, you can just click on the right button to move it out one expiration, or the left button to move it in one expiration. Or if you want to move the strikes higher, you just click on the right arrow or down arrow. Or you can use the strike drop down. So our drop down menu has the premiums in there for you, so that if you want to select the premiums, you can do so off of the strikes. And we even have an indication for you as to one standard deviation move up or down for each given expiration. So if you want to look at the March 2019 expiration, it'll give you a sense for the range of strikes, as well as where the one standard deviation moves are, so that you can quickly get a sense for where you want to look, even if because these drop-down menus, in my opinion, sometimes are some of the worst places to select your strikes, because you have no idea what the premiums are. You have no idea where the markings are. This provides you with some guidance on that. And for multi-leg options, you can move both the strikes up one or down one just by the click of a mouse, so that you don't have to fiddle with all of these drop-down menus every single time you want to change the strikes. And you can just make the width wider or narrower with the click of a mouse. This is all designed to help you navigate the chain without having to pull up the full chain. And for those of you that are a bit more advanced, you can use our strategy constructor. I use this a lot in my webinars, but I don't get a chance to really walk you guys through this. But the strategy constructor allows you to construct all different types of strategies. So if you are a bit more advanced and you want to trade diagonals and verticals and synthetic stock and all of these types of butterflies, condors, straddles, strangles, you can do that all by the click of a mouse and construct any of these 45 plus strategies that we have just by the click of a mouse. And then if you ever screw up, you can always just hit reset legs and it brings you right back to where you started. This is all designed to make your life as easy as possible to navigate the chains, try out different strategies, and most importantly, compare strategies side by side. That's something that we couldn't do on a lot of trading platforms. You can pick a strategy and you can analyze that one strategy, but you couldn't really compare, the February put vertical to, let's say, the March put vertical. This is something that we wanted to do as traders. So what we would do is we would set up different expiration dates, different strike prices, and be able to compare. So buying a February put will cost me a 185, buying a March put will cost me 285. So then I can take a look at the P&L simulators to say what happens if the stock goes down to $35 by February 1st. How much money do I make? So clearly the February one's going to be much better return than if I bought the March one. So that settles it. Because if you're just looking at an option chain, it's really difficult to compare February to March or one expiration to another. This really allows you to put any two strikes or expirations next to each other and compare them apples to apples, and see exactly what your expected return is. So as you can see, if I bought the March put vertical, I would be out substantially less return than if I bought the February vertical. And this tool allows me to definitively say exactly which trade I want to make. And once you're ready, you hit the trade button. It gives you all the details on how to enter this trade into your broker's platform so that you can enter this trade correctly. And lastly, what we have here is a strategy checklist. So this is really designed to make your life a little easier, because we're checking for a bunch of things that perhaps you might be unaware of, especially for beginners. So we check to see if you're trading with the trend of the stock. We see if you're trading with the trend of the market. We check the OptionsPlay score, which I'll go over in 1 second. The earnings date, which is something that we see a lot of beginners tend to overlook. And lastly, spread and liquidity. And extremely important to understand how liquid something is before you trade, something that you tend to worry about a little bit more on the options side than you do on the stock trading side. On the options trading side, you have to understand how liquid something is, and the best way to do that is checking the spread between the bid and the ask price. That gives you a sense for liquidity. The more liquid something is, the tighter the spread. The less liquid something is, the wider the spread. That's a much better gauge than volume and open interest. And the reason for that really is because if you look at volume and open interest, it's spread across thousands of strikes. So it's more of a, as far as whether there's open interest or volume, is sometimes down to luck, whether someone else just happens to be looking at the same strike as you are. So when I look at this, that has, this strike has very little open interest and volume, the 175s versus the 180s versus the 172.5s. It's not like the 175s are any less liquid than the 172s. It's just that not many people has traded the 175s. So keep that in mind. Don't just look at open interest and volume. It's not always a good indicator of liquidity. The spread between the bid and ask price is a much better sense for liquidity. So with that, what I want to do is I want to now jump over to the income trading side. So for those of you that like to sell covered calls, for those of you that like to do cash secured puts, what I typically start off with is a watch list. And what I always tell users to do is create a watch list with stocks that you're interested in. So two lists, either stocks that you already own or stocks that you want to own, because that is typically how you'll use the income panel. So as you can see here on the right-hand side, we have a button for trade, which will give you the 3 trading strategies, and we have an income panel, which gives you effectively the same thing, but strategies suitable for generating income, and that's cover call and cash secured put. So when you use the income panel, the first thing you want to use is the income settings here at the bottom, because we allow you to create personalized settings as far as whether you want to sell cover calls for short, medium, or long term. And I have a whole webinar dedicated just to selling cover calls. I highly recommend you to view that if you do want to learn more about the strategy. So you can set how far out you like to sell your cover calls. You can even select your risk tolerance, whether you're conservative, optimal, or aggressive. So my settings for a cover call is short term because I'm fairly active, and it's optimal because I'm not too conservative or I'm not too aggressive. When I'm selling puts, I like to get short term, same thing for puts, but I like to be more aggressive because typically when I sell a put, I actually want to own the stock, so I want a higher probability that that actually happens. So I select aggressive for my puts. And once I do that, I can save as default. And now what I can do is I can go through a watch list. So let's say I own Halliburton and I want to sell some covered calls on Halliburton. I can click on Halliburton, and then on the income tab, it will ask me, do I own shares of Halliburton? So if I'm selling covered calls, then I would say yes. I can enter the number of shares of Halliburton that I own. And again, what OptionsPlay does is it provides me with that starting point, which means that I don't have to pull up a Halliburton chain, go through the process of figuring out what is the correct expiration for me. So traditionally, I have to pull up the option chain. I have to go through all the strikes and expirations to figure out where to start. There's a lot of process that I have to go through before I can figure out where to start. OptionsPlay does all of that work for me. I don't have to pull up a chain. I just have to type in Halliburton, and it tells me to look at selling 2 contracts on the January 11th, 30 covered calls. So the stock's trading at $27. This is telling me to sell a January 11th, 30 covered call, which brings in $68 in premium. They produce a 20% annualized return on it with an 81% chance that this call is going to expire worthless. So if you own Halliburton, you're getting paid a 2.61% dividend yield, which is fairly average for the S&P 500 stock. But this adds an additional 20% yield on top of that. I'm actually going to collect 1.25% of the underlying stock in just 22 days. So imagine reducing the cost basis of your stock by 1.25% over the next 22 days. And it gives you the opportunity to sell your stock at $30. And so think of it as almost like placing a limit order to sell your stock at $30, but getting paid to place that limit order, getting paid $68 to place that limit order. That's what you're effectively getting with the covered call. And this tool makes it as easy as possible so that you can click on any symbol, and without having to pull up an option chain, without having to go through all of that, provide you with the starting point based on your personalized preferences. So January 11th, 102 covered call on a stock that's trading at 96.5. So that's roughly about $6.5 above the current price, giving me $48 in income, which is 8.26%. Annualized over the next 22 days. So this stock does pay a nice 3.2% dividend. But if I added another 8% on top of that, that brings my total yield from 3.2 to 11.5. So extremely important way to, or very attractive way to add yield to the existing stocks that you have in your account. Keep in mind that these are stocks that you already own. These are stocks that are just sitting there earning some dividends. Cover calls allow you to extract an additional yield on these stocks that you already own, stocks or ETFs. And this tool is designed to make that process as simple as possible so that you can click on any symbol. And let's say, for example, for CVS, instead of owning the stock, maybe I want to own the stock. So traditionally, if I find $66 a little too rich and I want to buy it at a lower price, what can you do? You would simply put in a limit order to sell, to buy the stock at a lower price. But to place a limit order, you don't get paid to do that. So if the stock rises and doesn't go any lower, it doesn't hit your limit order, you have nothing to show for that. You can, however, sell a put. That basically says that, if let's say I'm selling a January 11, 63.5 put, that's like putting a limit order to buy the stock at 63.5. But I'm going to get paid $106 to put in that order, so that no matter what happens, even if the stock takes off and this order never gets filled, I still get to keep my $106. So I'm basically, if my order goes unfilled, I keep my $106. If the order does get filled, I still end up owning the stock at 63.5. But now I own it at $106 cheaper than I would have if I just bought it at 63.5. So if I bought it at 63.5, I would have to pay $6,350. But now what I do is now I own the stock at 62.44 because I've now reduced that cost basis by $106. So now you've reduced your cost basis, you've reduced your max risk, and if the stock takes off, you're going to make a higher reward because now you can, now that you've reduced your cost basis by $106, you can further then start selling covered calls on top of that and generate additional yield. So this is really how you can continuously use short puts to start buying stock at a lower price. Once you've bought that stock, start selling covered calls to generate some yield. And that's how you're going to be able to generate consistent yield in your portfolio, is by using these types of strategies to generate income. And you can generate income both on stocks that you want to buy as well as stocks that you already own in your portfolio. And this tool makes it as easy as possible so that you can click on any stock and instantly see both the covered call opportunity if you own the stock, or the short put opportunity if you want to buy the stock at a lower price. So this is really how we go about utilizing this tool to help you make this process for selecting an expiration and strike price as easy as possible, giving you the breakdown so that you can understand each one of these strategies in plain English, not in Greek terms or terms that you don't understand. And lastly, once you're ready to trade, hit the trade button so that you can immediately get a sense for how to enter this order, and look at the strategy checklist to make sure that you have all your bases covered so that you don't make the same mistakes that beginners typically tend to make. And you can utilize OptionsPlay for all types of strategies. But if you're ever on this platform and you're not sure what to do, there's a few ways that we can help you. First of all, we have a guide here at the very bottom. This allows you to basically bring up these help pins so you can hover over. So if you don't know what the technical score is, you can just hover over and it'll explain it to you. And it's all context sensitive. So if you're looking at this and you don't know what the OptionsPlay score is, it helps you understand what you're looking at on your screen. So that you can use the guide button here in the lower left-hand corner to activate that. But if, let's say, you're looking at a strategy and you don't understand what's going on, you can ask us questions by clicking on this button on the upper right-hand corner. You can type us a message. You can even include a screenshot, and that goes into our support queue, and we can answer your questions regarding anything that you're seeing on your screen. So if you ever need any help for a strategy, if you need help with your account, your subscription, whatever it is, please send us a question. We'll be able to answer all your questions as soon as we have the ability to answer your questions. So with that, I just want to thank everyone for taking the time out this afternoon before your holidays. I know everyone is kind of winding down for the year, so I do appreciate that you guys take the time out this afternoon to listen to how we use OptionsPlay to make your lives a little easier. So at this point, what I want to do is I want to open this up for Q&A. Please, if you have any questions regarding anything that I just went over here, please type your your questions into either the Q&A window or the chat window, and I'll try to spend as much time as I can to answer the questions that you guys have regarding the platform. I know there's quite a few questions already, so I'll start answering those. So please just type your questions in, and I'll answer them in the order that they came in. We're going to get the meaning of the scores. Okay, so great. I'm going to actually cover that real quick, but like I said, you can click on the guide button and see what the OptionsPlay score is or what the technical score is. You can do that all from the guide. But let's go back to the I don't know let's look at the Qs. You know, Nasdaq has really been beat up significantly. Looks like we got a slight rally into the close. Let's see. So the question here is, what do these scores mean? So the OptionsPlay score is simply looking at the risk to reward of each strategy. And the reason we created the OptionsPlay score is because most platforms gives you an outlook that looks like this. They tell you the max reward, the max risk, the probability of profit. But in order to compare some of these, it's really difficult because some have unlimited reward, some have unlimited risk. Others have limited risk and limited reward. So how do you actually compare all of these things and get a number that you can understand? And that's why we created the OptionsPlay score. We wanted to give you a single unified number that gives you an understanding as to how well balanced the risk to reward of each strategy actually is, and give you probabilities so that you can better understand each strategy and compare them. So the risk to reward ratio of each strategy is color coded. So yellow, it means average, red means poor risk to reward, and green means good risk to reward. So at this point, puts are actually quite cheap on these types of names, like for example, the QQQ, despite the fact that we're in this kind of fairly bearish market, I would say, or bearish trending market. So as you can see, the risk to reward on puts are far better than on calls, meaning calls are quite expensive right now versus puts are quite cheap right now. So, and that may be an indication of in itself, but that's what the scores are telling you. Roland's asking, at some point, please clarify the significance and meaning of the scores. 10 bearish? Okay, so great question. So Roland's asking the technical score here. So when you type in a stock, there's a reference of a technical score. So Apple is neutral, a score of 6. What's a stock that's bearish? So let's see. So Charles Schwab is 3, so this is a weak stock. And then I think PHM that we were looking at before is strong. So this is relative strength. So the reason we use relative strength is because when you compare just trend, you're only comparing against itself. But what you really want to look at sometimes in the stock market is how stocks are doing relative to other stocks. So you could have a stock that's, in this particular, it's like the stock that's really moved sideways for the last month or so. But it's very strong because all the other stocks in the market has been dropping. So the fact that this stock has kind of just moved sideways makes it a relatively strong stock. That's why it's got a score of 8 versus a stock like Schwab has been moving lower with the market. It's actually moving faster than the market. That's why it's got a score of 3. And then if you look at Apple, it's been moving pretty much on par with the market in terms of movements lower. That's why it's got a score of 6. So this just helps you quantify how bearish or how bullish something is in comparison to everything else in the market. That's what the technical score tells you. Alex is saying, what is the highest value for score? Would it be good to add delta values on drop-down menu? So when you're talking about the OptionsPlay score, the highest it can go to is 250. But in reality, there really isn't a bound because they're really risk to reward ratios, and risk to reward ratios can go as high as possible. So there isn't truly a bound for the OptionsPlay score, but that's why they're color coded. You don't have to worry about the number as much as the color. The color gives you a general sense for whether risk to reward is average, good, or poor. As far as adding the delta values to the dropdown, that's a good suggestion and certainly something that we will consider in the future. Thank you, Alex. how can I save my strategies on my computer and recall them later? Great question. So I think this is a question for a lot of beginners. You know, if you're starting out and you're testing out strategies, you're not ready to trade them live, but you want to test them out or maybe paper trade them. A great way to do that is our platform allows you to save trades. So if, let's say I'm looking at Apple, I'm thinking about being bearish on Apple, but I'm not ready to pull the trigger. So let me save this trade. You can click on the little link button here. And what that does is it creates a save trade. You can send this off to someone as well. So for example, if you want to share this with a friend, you can do that. But once you save a trade, it goes into your profile. It's in your shared trades, and you can click on all of the trades that you've looked at historically, and you can click on it. What it does, it actually brings up that trade. So actually a trade that we sent out a few weeks ago on Nike is here. And what it does, it shows you that trade, and it also shows you the performance of that trade. So not only can you track a trade, you can actually see how well it's been doing. So this is a great tool for those of you that are starting out to be able to effectively paper trade a strategy and see how it performs as it goes along. Steve is saying the screen above the chart is blank. Steve, why don't you send me an email at info@optionsplay.com. I just sent a chat in the chat window. Send me a screenshot if possible, or just do this questions ask us with the screenshot, just so I can see what you mean, and I'll be happy to answer your question. Let's see. Where can I see implied volatility? Great question. So implied volatility is right here. So for example, Nike, the implied volatility on this is 41.62. You can also see the implied volatility if you go to explain strategy in Greeks. However, part of what we do here is we want to actually remove some of that implied volatility numbers for you, because implied volatility still requires you to take that implied volatility and analyze it and decide whether it's good or bad. And what we want to do is take that one step further. So because Nike's implied volatility is relatively high, that's why when you buy an option, you're going to get a relatively average score or low score. If I sell this option instead, I'm going to get a much higher score, because implied volatility is relatively high on Nike. I'm going to get a better score by selling that put option than I do by buying that option. So we take it one step further. Not only do we show you the implied volatility, we actually show you whether it's better to buy or sell vol here in this particular case by using the OptionsPlay score. What are the numbers in the circles to each of the trading scenarios? I think I just answered that as far as the OptionsPlay score. Please explain the graphs to the right-hand panel. So the graphs are simply how the strategy will perform. So as the stock moves lower, so as you can see when I use the Pml Simulator, this is where the stock goes lower, and that shows you how much gain. And if stock goes higher, how much losses there are. So it really just shows you where, as the stock moves up or down, how the strategy actually performs. Is there a brokerage that offers OptionsPlay as part of their platform? There's quite a few brokers that do offer OptionsPlay as part of their platform. Alvin's saying, started using it last month and started learning it. I have been using it to assess weekly options while paper trading. Is there any way to save the study selected to the charts? So currently we're actually in the process of looking at a new charting package, which will allow you to save. So as of right now, you cannot save these strategies, unfortunately. Adina, so Adina is asking a question about, how does she find a debit spread where you're buying the 60 delta and selling the 15 delta? Actually, that's actually how we default to our deltas. So our delta on the debit spread is a 60 delta, 15 delta for both call options and put options. So that's actually automatic for you. I understand what you mean about being able to see the deltas of each individual leg. Unfortunately, the best way to display deltas of each individual leg is to look at an option chain. So if you're looking for the deltas of each individual leg, I tend to find that the option chain is the fastest way to do that. So again, even though option chains, I think in many occasions are harder to use, there are a few times where option chains are just simply easy when you want to quickly find the strike of something for a specific delta. But our platform is designed to do that work for you. So if you're looking at Apple and you want to know what that 60-15 delta call spread is, we default to you to that. So the 60 delta is roughly 57.5, and the 135 is roughly the 15 delta. Let's see here. What about selling covered calls on leaps? Does that make sense? Absolutely. So you would still do the same thing. There's nothing that would change here if you're selling covered calls, except that if instead of owning the stock, you own the leap. Nothing changes about selling the call piece. So you would still sell the January 11th 170 call, regardless of whether you own the stock or if you own the leap. So you can utilize this tool for both of those. Eric, regarding your question about Merrill Edge, if you don't mind, just send me an email at info@optionsplay.com. I'm happy to answer those questions. But as you can see, there's a full-fledged platform here that Merrill Edge customers only get the trading and income tab. You don't get the security analysis panel. You don't get the trade ideas. You don't get the visual watch list. And you certainly don't get our daily trade ideas. So for those of you that are new to OptionsPlay, one of the things that we do is we send a daily trade idea to users. So today, we were taking profit on a Nike trade, but yesterday we sent a bearish trade on Pepsi. Every single day you get a trade alert in your email inbox. That's one of the things that you get with OptionsPlay that you simply don't get when you're at Merrill Edge. If I've placed an order to sell a cover call and then for whatever reason want to buy this back before expiration, how would I do that? Great question. You would just simply go to your broker's platform. Most platforms will allow you to essentially create a close order on any existing call option. You would do that. It really depends on your broker, but it would simply be a buy to close order. So because you sold it, to get out of it, you have to buy it back. And the only thing is that you want to make sure you buy to close because you're closing out an existing position. Larry, as far as how to do it at each individual broker, the best thing to do is just call your broker. They'll be able to walk you through how to do that. Alex is saying, is there any way to update the option value intraday? Well, every single time you actually type in a symbol, we're pulling the intraday pricing for you. So every time you refresh your screen by putting in a new symbol, we are pulling the most up-to-date pricing for you. What delta do you suggest on a cash secured put? So like I said, for me, when I'm selling cash secured puts, I like to get aggressive, which is a 30 delta put. So when I sell puts, I use short-term aggressive. So that's roughly a 30 delta put, which is why, for example, for Harley Davidson, it's telling me to sell the January 11th 31.5 strike on a stock that's trading at $33, so about $1.50 below the current price. And as you can see, it's got a POW, or probability of expiring worthless, of roughly 67%, which is the inverse of delta. So this has a delta of about 32. So I like to sell just around that 30 delta put because I want to have a relatively high probability of getting assigned. Because you sell a put because you want to own that stock, and being more aggressive, I'm going to get a lot more premium. So here I'm actually reducing my cost basis on the stock by 1.7%. So imagine if you can buy the stock at 1.7% discount just for placing a short put order instead of buying it with a limit order. So I almost never buy stocks with a limit order because I have the ability to buy it with a put. And you can always get more aggressive. So if you really want to own this stock, then you can move this up to maybe 32.5 put and collect $92. So now I'm reducing my cost basis by almost 3%. So getting a discount of 3% on buying the stock is certainly something I'm going to take every single time, as opposed to just placing a limit order. Let's see. Tom's asking, is there a daily play options emailed every day? Yeah, so it's emailed to you every single day at 6 a.m. Eastern time. We send that out. Probability is similar to probability of out of the money. Yes. So the difference of probability of expiring worthless is that it's based on the strike price. So this is what is the probability that it's below that strike price I'm sorry, above that strike price, because this is telling that this is the probability of the put expiring worthless. So yes, out of the money, that this would be the probability of being out of the money. Art is saying, is there a discounted rate for those whose broker offer options play within their platform? Art, why don't you send me an email at info@optionsplay.com? I'll see what I can do for you. So yeah, just send me an email at info@optionsplay.com. Tell me what broker you currently traded with, and I'll see what I can do. So that's the last of the questions. Okay, Alex is saying, is there any way to compare one strategy on two different stocks side by side? So no, you cannot compare one strategy on two different stocks, unfortunately, because it's just, you can only move the target price of one stock at a time. Because I wouldn't be able to tell you how one strategy compares to another strategy. I'm also not sure why you would do that. If Alex, if you can send me an email, I'm happy to kind of think that one through with you. But yeah, it's one symbol at a time. Any other questions? You're welcome, Alex. So if there's no other questions, again, I want to thank everyone so much for taking the time out this afternoon, so close to the holidays, to come and listen and understand how we utilize this platform and why we built this platform to make your lives as easy as possible when it comes to options trading. And I hope everyone has a great and wonderful holiday with your families. We are going to be taking effectively a break between Christmas and New Year's. And I'm actually not going to resume the webinar series until the third week of January, but I have a really good schedule already planned for the last 3 weeks in January. We're going to have another strategist come in, Dan Passarelli, a good friend of mine who's been a mentor and a market maker in options for almost 30 years. We're going to discuss the markets, talk about what's currently going on, a lot of big volatility and structural changes in the market. So I'm bringing in someone else to help provide a different perspective as well. That will be on January 17th. And we're going to do a couple of other webinars talking more so about money management, because I think this is something really important to understand with options. You know, I do a lot of webinars talking about specific strategies, about how to utilize some of these strategies. But, you know, at the end of the day, you still have to deploy good money management skills. So those are some of the things that I'll be exploring in January for you guys. So I really look forward to coming back in January and doing more of these webinars. And we're going to bring more strategists, more outside counsel, if you will, to bring a different perspective as to what's currently going on in the market. And then lastly, what we'll do, I think, at the end of January is we'll do an earnings webinar. So because we're going to go right into earnings season, so we'll cover all of those topics in January. So please have a great holiday. And I will see you guys in mid-January. Thank you so much. Thank you for your support for Options Play during 2018. And I'm really hoping to having a great start in 2019 with everyone. So have a great afternoon, have a great evening, and I will send you the webinar recording in about half an hour or so. So I'm going to be signing off, and I'll see you guys next year.